Final account. Do like, share and subscribe my channel and press the bell icon for early notifications. Now final account. What is final account? Final account gives an idea about the profitability of a financial position of a business, that how the business is running, to its management or its owner. All transactions are first entered in the journal, then they are posted in the ledger, and after that balance sheet is prepared. The three important accounts need to be prepared under final accounts. What are the three important accounts? Under final account, we have to prepare trading account, profit and loss account, and balance sheet. Now first, what is trading account and why there is a need to prepare a trading account? Now trading account shows the gross profit of a business during a specific period of time. We derive the gross profit by preparing the trading account. In other words, we can say that trading account gives a detail of what is the total sales, the total purchase and any direct expenses related to purchase and sales. There is a format of a trading account. We are preparing a trading account. Now we have to draw 6 columns. Left side for debit, date, particulars and amount, and right side for credit, date, particulars and amount. In the left side we will first write to opening stock, again to purchase and any direct expenses. On the right side, that is on the credit side, we will write by sales and last by closing account. After that we will balance it and we will get the gross profit. If there is a gross loss, then it will be written in the credit side. The gross profit will be transferred to profit and loss account. Now what is profit and loss account and why there is a need to prepare a profit and loss account? First, profit and loss account is a financial statement that summarizes the revenue, cost and expense incurred during a specific time period. These records are helpful because they provide information about the company's ability or inability to generate profit by increasing and reducing cost. Now the gross profit will be transferred to PL account and after that all the indirect expenses will be deducted from the PL account, and these indirect, after deducting all the indirect expenses, we will derive the net profit, and these net profit will be transferred to this net profit will finally be transferred to balance sheet. And why there is a need to prepare a final account, or why there is a need to prepare a profit and loss account? It is prepared to disclose all the results of operations of the business transaction during a given period of time. For that, profit and loss account is prepared. Now format of profit and loss account. Profit and loss account, again we have to draw 6 columns. On the left, date, particulars and amount in the debit side, and on the right, date, particulars and amount in the credit side. Now by gross profit account, BD means the amount which we derive or which we get in the trading account, that will be carried down in the profit and loss account. To office and administrative expenses, these all are expenses in the left hand side, and these all expenses will be deducted. Like to office and administrative expenses are salaries, rent and rates, postage, insurance, etc. To marketing and selling expenses like carriage outward, discount allowed, bad debts, commissions, etc. To financial and other expenses like bank charges, interest, depreciation, loss by theft, accident and fire, etc. This all will be deducted. And what will be added? Like by rent, income, commission, royalty, anything that will be received will be added. By dividend received, by interest on drawings, by bad debts, and by provision for bad debts if there is a credit amount. By adding all the right side, that is all the credit side, and deducting all the left side, that is all the expenses side, we will get the net profit, and these net profit will be transferred to capital account. Now what is balance sheet and who uses a balance sheet? Therefore, a balance sheet is a statement of the financial position of the business that shows the assets and the liabilities and owner's equity at a particular point of time. It shows the business net worth. For that reason, balance sheet is prepared. We derive in the balance sheet all the assets and the liabilities along with owner's equity is recorded. And who uses a balance sheet? The balance sheet along with the income and cash flow statement is important for owner and investor because it is used to gain insight into the company and its financial operations. Now the format of balance sheet. Note, this horizontal format of balance sheet is just for understanding. We prepare the balance sheet in vertical format as per revised schedule 6. Now balance sheet for the year ended, that is 31st March and any of the year. Now in the left hand side there is liability and in the right hand side there is asset. Now in left hand side first is owner's equity, that is the capital plus the net profit which we get in the profit and loss account will be transferred over here. After adding that, drawings will be deducted, less drawings, and finally the amount will be derived. Any reserves and surplus in the liability sides, any loan in the liability side, and what are current liabilities like sundry creditors, bills payable, etc. These all are current liabilities. Now in the asset sides, plant, land and building, furniture, fixtures, any asset, goodwill, patent, less depreciation, all this will be happen in the fixed asset. After that, investment, and finally the current assets like sundry debtors, cash, bills receivable, etc. And last, the liability and the asset amount will tally with each other. Thanks for watching. If you have any queries, comment me in the comment section below.